Let's get back to the Bank of Canada's Business Outlook survey. Perhaps not a huge surprise that business leaders in this country aren't feeling great about their prospects. Indeed, as we said, that gauge of sentiment going down to its lowest level since the financial crisis. Here to help us sort it all out is Benjamin Tal, Deputy Chief Economist at CIBC. Benjamin, always a pleasure to have you with us.
Thank you very much. A pleasure.
So let's start with the Business Outlook survey. I mean, we keep getting all these different reads, forward-looking, backward-looking about the economy, and we're not surprised that they're downright miserable because we've all lived through this experience of COVID-19. But as we look at this and the forecast business leaders have for the months and the year going forward, is there extra reason to be concerned?
Yes, first of all, if you look at the numbers, it's back to 2008, the worst reading since the financial crisis. And the question is, why only at this point it should be actually lower than financial crisis, given the fact that we're talking about a significant slowdown and decline in economic activity. So the question is why it's not worse. And the answer, I think, is two. One, clearly the government money is helping. Back then, you didn't have that kind of assistance. And second, which I think is extremely important, and it's between the lines of this survey, is that it is viewed, this crisis is viewed as a temporary crisis. You know, in 2008, 2009, people didn't know what's going on. The financial system was collapsing. People didn't know if there will be tomorrow from a financial system perspective. Here, you know that there is an end game, and this end game is a vaccine or some sort of a treatment. So everybody is waiting for this kind of treatment or a vaccine, and I think that between the lines of this survey, you can sense this sentiment.
Is that where the real risk lies, Benjamin? The fact that this was an engineered shutdown of the economy? As you said, a monster was created on Wall Street all through the 80s into the 90s. You're talking about securitization vehicles that just fell apart and the housing market collapsed. So we just hit the brakes on this economy pretty much overnight and said, listen, we got to shut down because of the virus. Is that the real risk here, that we don't get the end game right, even without a vaccine?
Yes, that's the issue, and that's the big risk that we are facing. Remember, back then, in 2008, 2009, you really didn't know what tomorrow will bring. Here we have this level of uncertainty, but if you look at this survey, today's survey, the level of optimism is actually higher than in 2008, again, reflecting this expectation that this will come to an end. Now, if we don't have a vaccine, then you are absolutely right. We will have a situation in which all those expectations will not come through, and that will be a significant negative impact on the market. So clearly, the trajectory of the virus, the ability to fight this virus is key to the next survey and the survey after that.
Benjamin, today the Bank of Canada also put out another survey trying to tap the psyche of the Canadian consumer. Found some interesting stuff in there. I want to start on the labor side. Again, not surprising, but perhaps troubling further down the road for this economy, that Canadians less secure in their employment if they have it, and if they lose it, they're less confident they'll find another job. Usually we look to the labor market for signs of health as to will we be spending in the larger economy? Will we be, going out and putting money into retailers' pockets? Will we be buying houses? Is that troubling with people thinking, not sure about the job I have, I'm not sure if I could get another one if I lost this one?
Yes, that's key, and that's extremely important because now the probability of losing a job is approaching 20%, according to this survey. That's a huge number. We have never seen this kind of number, and therefore the fear of losing a job and not getting a new one is big and impacting the psyche of the consumer, the willingness to spend, of course. And that's why I believe that this recovery will be a very muted recovery. The next year, the next month or two will be great, with the weather and people waking up. But come October, November, when we get the next survey, I think that with the second wave happening maybe in Canada, the flu season, the uncertainty linked to this kind of situation will have an impact on the survey, on the psyche of consumers. You are absolutely right that the job market is the number one factor here. And although the employment numbers were better in the survey of businesses relative to the production numbers, overall, we're not talking about a very strong labor market coming anytime soon. There will be this improvement in the short term, but we are starting to see more and more permanent jobs being lost. That's something that we have to keep in mind.
Now, obviously, as goes the fortunes of the labor market, goes the housing market as well. The survey also asked Canadians how they felt about home prices, and I actually found this to be optimistic, at least compared to what the CMHC had to say. In the survey, they said, we expect home prices to remain flat. I mean, the CMHC had average home prices down anywhere from 9 to 18% in the next year. Do you think Canadians have the right read right now in the housing market?
Well, I think that they're a bit optimistic about the housing market. I think that the housing market actually will be not as great as expected by this survey. I don't think it will be a disaster, but I think prices will go down. Remember, we are still riding this wave of government money getting into the pockets of many Canadians. That will not last forever. It will be modified. And when we see that, that will start impacting the psyche of consumers and homeowners. Again, I think that the housing market might surprise some experts. It will be actually better than expected, but I don't think it will be like nothing happened. Something will happen, maybe not in the next few months, but after that we'll feel the pain. I think so.
I was going to ask Benjamin, what do we make of, the numbers we've been getting? April, clearly everything just sort of halfway through March, all through April, we were sheltering in place. We weren't making big purchases. It was understandable. So many parts of the economy, including housing. But then housing starts roaring back. And I've so many people, I try to wrap my head around it. I was like, well, why do you think this is a good time? Or I'm, the average Canadian, why do you think this is a good time to buy a house? We're in the middle of a global pandemic.
You know what? That's a very good question. And in a survey that we did, we found that around 25% of homeowners are telling us that they are thinking of buying another unit as an investment in this environment. Why? Because their income is untouched. Interest rates are in the basement, and the market is soft. This is the opportunity that they were waiting for all their lives. So you see actually a lot of interest coming from investors in the market, and I'm not surprised by that because, again, we have to remember 80% of job loss so far was concentrated among low-income Canadians. We are not all in the same boat. We are not. And given that, there are many Canadians that see their income untouched and see the housing market getting softer and interest rates are extremely low. That's an opportunity, and that's where you see demand coming.
Benjamin, it's always great to get your insights. Thanks for joining us.
A pleasure. Thank you.
Benjamin Towles, Deputy Chief Economist at CIBC Capital Markets.